Good afternoon, everyone. Thank you for joining us today. I'm Zach, the Outreach Coordinator at the Taxpayers Help Center, and today I'm here to talk to you about navigating tax relief after California's recent wildfires. These wildfires have devastated homes, businesses, and communities, leaving many facing financial and logistical challenges. However, both the federal government and the state of California have enacted various tax relief measures to help those affected recover and rebuild. The goal of this presentation is to equip you with the necessary knowledge to take advantage of these programs and ensure you can maximize the benefits available to you. The Taxpayers Help Center is a nonprofit 501c3 organization in Northridge, California. We operate two clinics, the first of which is our low-income taxpayer clinic, and we help taxpayers resolve their tax disputes with the IRS. The second of which is our volunteer income tax assistance clinic, which we help prepare income taxes for free. Additionally, we are an IRS authorized certifying acceptance agent for individual taxpayer identification number applications. Isaac and the outreach coordinator, and Masood Chotani is the clinic director here at the Taxpayers Help Center. And then just before we get started, a few things I want to mention. While we present, please make sure your microphone is muted during the presentation so we don't have any background noise. Feel free to use the chat feature to type in your questions anytime. I'll be sure to address any questions that may arise. And then lastly, if you experience any technical issues, please let us know through the chat and we'll do our best to address it. If you'd like to connect with us, you may do so by email at info@taxpayershelpcenter.com, through our Facebook, Taxpayers Help Center, Inc., a nonprofit organization. And then we have our physical location at 9029 Reseda Boulevard, Suite 209, Northridge, California, 91324. And then our website, taxpayershelpcenter.com, and our phone number, which is listed here. Additionally, if you have any questions at any time during this presentation, you can email us at info@taxpayershelpcenter.com, and a tax professional will get back to you. The Taxpayers Help Center helps taxpayers both locally and beyond. And since the services we provide are free, donations are important in supporting us and in helping the reach of our services. Any monetary donations are greatly appreciated, and those who can volunteer their time or expertise or spread awareness are also a great help. If you would like to make a monetary donation, you may do so at taxpayershelpcenter.com/make-a-donation. Or if you go to taxpayershelpcenter.com and click on the Make a Donation tab, you will be able to do it there. So again, anything is greatly appreciated as these donations allow us to do what we do. This presentation, called Navigating Tax Relief After California's Recent Wildfires, is for the purpose of providing a comprehensive overview of federal and state tax relief measures to ensure that those affected understand how to access available benefits, meet deadlines, and properly file claims. By taking advantage of these tax relief programs, affected taxpayers can mitigate financial burdens and accelerate the recovery process. Federal tax relief, excuse me, filing and payment extensions. The IRS has recognized immense disruption caused by the wildfires and has granted an automatic extension for affected taxpayers in the Los Angeles County. This extension pushes back all major tax filing and payment deadlines to October 15th, 2025. The extended deadlines apply to individual and business income tax returns, quarterly estimated tax payments, and various payroll and excise tax filings. For individuals, this means that returns normally due on April 15th, 2025 can now be filed as late as October 15th without penalty. Similarly, quarterly estimated tax payments originally due in January, April, June, and September of 2025 are also extended to the same deadline. This extension is automatic for taxpayers whose IRS registered address is within the disaster area. However, individuals and businesses outside the designated zone who are nonetheless impacted by the wildfires may request similar relief by directly contacting the IRS. This extension allows affected taxpayers additional time to assess their financial situation, recover documentation, and provide and maximize available relief options without the added pressure of immediate tax deadlines. One of the most valuable tax relief measures available to wildfire victims is the casualty loss deduction, which allows individuals and businesses to claim uninsured or unreimbursed losses on their federal tax return. If you suffered damage to your home, vehicle, personal belongings, or business property that was not fully covered by insurance, you may be able to deduct those losses on your 2024 or 2025 tax return. When claiming this deduction, it's important to include the FEMA declaration number 4856-DR on your tax return. However, there are limitations. Personal property losses are subject to a 10% adjusted gross income threshold, meaning that only losses exceeding 10% of your adjusted gross income are deductible. For businesses, losses must be calculated based on the lesser of the adjusted basis of the property or the decline in its fair market value due to the disaster. Congress may pass legislation to classify these wildfires as a qualified disaster, which could eliminate the AGI threshold and increase deduction amounts, so it's important to stay updated on legislative changes. Federal tax relief, qualified disaster relief payments. The Internal Revenue Code, Section 139, provides additional relief by excluding certain payments related to disasters from taxable income. Under this provision, payments received to cover personal, family, or living expenses resulting from the wildfire are not considered taxable income. For example, if an employer provides financial assistance to employees for temporary housing, medical expenses, or other essential needs, those payments are not subject to income tax or payroll tax. It is important to note that this exclusion does not apply to income replacement payments such as sick leave or wages. For businesses, offering disaster relief payments to employees can be a tax-efficient way to support workers without increasing their tax liability. Proper documentation should be maintained to ensure compliance with Section 139. Federal tax relief, retirement plan relief. Recognizing that many individuals affected by the wildfires may need access to the retirement savings, the IRS has provided special disaster-related provisions for retirement account withdrawals. Typically, early withdrawals from retirement accounts before age 59 and a half are subject to a 10% penalty in addition to regular income taxes. However, under the disaster relief provisions, affected individuals can take qualified disaster distributions from their 401k, IRA, or other retirement plans without incurring the 10% early withdrawal fee, or they refer to as a 10% early withdrawal penalty, rather. And additionally, the taxable income from such distributions can be spread over 3 years, reducing the immediate tax burden. Those who wish to repay the withdrawn funds to the retirement account may do so within 3 years and avoid paying taxes on the withdrawal altogether. This provision ensures that those impacted by the wildfires have greater financial flexibility to manage unexpected expenses. Excuse me. Under Section 165I of the Internal Revenue Code, taxpayers have the option to accelerate disaster loss deductions by claiming losses in the prior tax year. That would be 2024, rather than waiting to file for 2025. This can be particularly beneficial for those who need immediate tax refunds to aid in their recovery. For instance, if an individual suffered a casualty loss in January 2025, they can choose to claim their loss on their 2024 tax return rather than waiting until they file for 2025. And this election must be made by April 15th, 2025 or October 15th, 2025 with an extension. Businesses can also take advantage of this provision to claim inventory losses, ensuring that they can properly adjust purchases and avoid double deducting the same amounts. This strategy provides a much needed financial lifeline to those seeking quicker tax refunds. California state tax relief filing and payment extensions. So just as the IRS has provided tax relief at the federal level, the California Franchise Tax Board, which is abbreviated FTB, has aligned its tax relief measures with federal guidelines granting automatic extensions to taxpayers in wildfire affected areas. So this means that both individuals and businesses in the designated disaster zone have until October 15th, 2025 to file their state tax returns and make any necessary payments. For individual taxpayers, this extension covers income tax returns that would have normally been due on April 15th, 2025. So for businesses, this includes corporate tax filings that would have been due in March or April 2025, ensuring that affected entities have additional time to manage their financial affairs and gather the necessary documentation. Importantly, no special action is required to qualify for this extension. So like for at the federal level, taxpayers with an address in the affected region will automatically receive this relief. However, for those outside the designated area who have experienced hardship due to the wildfires, if you contact the California FTB, they may be able to provide relief. And this extension is designed to alleviate the financial and administrative burden on those trying to recover, and is, done to allow um, those impacted to rebuild their homes, businesses, and communities without having the pressure of tax deadlines. In addition to income tax relief, California has implemented measures to assist businesses with sales and use tax obligations. The California Department of Tax and Fee Administration, abbreviated as the CDTFA, has granted an automatic 3-month extension for businesses that have a sales or use tax liability of less than $1 million. This means that any businesses that were required to file and pay sales and use tax for January 2025 now have until April 30th, 2025 to do so without facing penalties or interest. For businesses with a tax liability exceeding $1 million, relief is not automatic but may be granted upon request. These businesses must demonstrate how the wildfire disaster has directly impacted their ability to meet tax obligations and apply for relief on a case-by-case basis. By providing this extension, California aims to support businesses affected by property damage, revenue loss, and operational disruptions, allowing them additional time to recover financially without facing tax penalties. The California Employment Development Department, EDD, has also introduced relief measures related to payroll taxes and unemployment benefits. Employers affected by the wildfires may request up to a 2-month extension to file payroll tax reports and remit payroll taxes without incurring late penalties or interest. This ensures that businesses can continue to retain employees and process payroll without the added burden of immediate tax deadlines. For workers who have lost their jobs or are unable to work due to wildfire-related disruptions, Disaster Unemployment Assistance, DUA, may be available. DUA provides temporary financial support to individuals who do not qualify for standard unemployment benefits, including self-employed individuals and independent contractors whose businesses have been directly impacted by this disaster. Claims for individuals, casualty losses. So for individuals who have suffered property damage or loss due to the wildfires, the casualty loss deduction could provide a significant tax relief. When a disaster strikes, insurance may not cover all losses, leaving homeowners, renters, and property owners with substantial out-of-pocket expenses. The IRS allows taxpayers to claim uninsured or unreimbursed disaster-related losses as a deduction, which can reduce their overall taxable income. These losses can be claimed on either the 2024 or 2025 tax return, which allows some flexibility in determining which tax year offers the greatest benefit. To successfully claim a casualty loss, it is essential to maintain thorough documentation. So this includes photographs of damaged property, repair estimates, insurance claim reports, and receipts for expenses incurred in repairing or replacing damaged property. Proper documentation ensures that the IRS accepts the claim and that the taxpayer can justify the deduction in case of an audit. The casualty loss deduction is subject to certain limitations. So for personal property losses, only the amount exceeding 10% of the adjusted gross income is deductible unless additional legislative action modifies the threshold. For businesses, the process differs slightly, as losses must be calculated based on the lesser of the adjusted basis of the property or the decline in fair market value due to the disaster. If a business is completely destroyed, the deduction is typically equal to the adjusted basis of the property minus any insurance reimbursements received. So, given the complexity of these rules, consulting a tax professional is recommended and can help maximize deductions and ensure compliance with federal and state regulations. Claims for individuals, qualified disaster relief payments. In the aftermath of disaster, individuals often receive financial assistance to cover unexpected costs such as temporary housing, food, clothing, and medical expenses. Under IRC Section 139, these qualified disaster relief payments are not considered taxable income, which provides significant financial relief to those who have been displaced or otherwise impacted by the wildfires. So this means that if you have received a payment from an employer, nonprofit, organization, or government agency specifically for disaster-related expenses, you are not required to report it as income on your tax return. However, it is important to differentiate between qualified disaster relief payments and other forms of financial assistance. Payments that replace lost wages, sick leave, or other forms of regular income do not qualify for this exclusion and must be reported as taxable income. To ensure compliance with IRS guidelines, individuals should keep disaster records of all disaster-related payments. So this includes documentation of how funds were used. This will be particularly important if the IRS requests verification of tax-exempt status. By understanding and utilizing this provision, it can help individuals alleviate some of the financial strain caused by this disaster without facing additional tax burdens. Claims for businesses, inventory, and property loss. For businesses, wildfire-related losses could be devastating, particularly when inventory, equipment, or property is destroyed. Fortunately, the IRS provides a mechanism for business owners to recover some of these losses through inventory and property deductions. Business inventory losses are typically treated as cost of goods sold, COGS, but in the event of a disaster, businesses may be able to deduct the loss separately to maximize their tax benefit. However, businesses must ensure that they do not double deduct the same inventory loss. If the insurance reimbursement is received, it must be properly accounted for. To claim a business property loss, owners must determine the adjusted basis of the property before the disaster and compare it to the fair market value after the event. The deduction is generally the lesser of the adjusted basis or the reduction in fair market value due to the wildfire. If a business property is fully destroyed and no salvage value remains, the loss is typically equal to the property's adjusted basis. Proper documentation is crucial for substantiating these losses. Businesses should maintain detailed records of damaged inventory, receipts for replacement purchases, insurance claims, and professional appraisals of property damage. Additionally, businesses that elect to claim their disaster losses on the prior year's tax return must ensure that they filed the appropriate forms and meet IRS deadlines to take advantage of this option. Consulting with a tax professional, as always, is recommended because it can help business owners navigate these rules and maximize their available deductions. Claims for businesses, employee payments, and tax extensions. Many business owners want to support their employees during this disaster by offering financial assistance. So under IRC Section 139, employers can provide tax-free disaster relief payments to employees for essential expenses such as temporary housing, medical care, and disaster-related repairs. These payments are not considered taxable wages, meaning that both the employer and employee benefit from the tax exclusion. Employers should ensure that payments are for qualified disaster-related for qualified disaster-related expenses and not for general compensation, as regular wages remain subject to income tax and payroll tax. In addition to employee relief payments, businesses should be aware of the federal and state filing extensions granted to the wildfire. To take full advantage of these provisions, employers should maintain detailed records of all these payments, tax filings, and any disaster-related adjustments to payroll and business expenses. Practical guidance, claiming casualty losses. So for those impacted by the wildfires, claiming casualty losses correctly can save a lot of money in tax. And this process, you know, it requires very careful documentation and adherence to IRS guidelines. And so the first step in claiming a casualty loss is to document. And then next, individuals and businesses must file Form 4684, casualties and thefts, with their tax return to report the loss. The deduction amount is calculated based on the fair market value before and after the disaster, reduced by any insurance reimbursement received. And for property losses, taxpayers must also meet the 10% AGA threshold, which we've already mentioned. So this means only losses exceeding the threshold are deductible. And then, as we've mentioned, businesses follow slightly different rules. To maximize these benefits, once again, it's very important to consider which tax year, so 2024 or 2025, is more advantageous to claim losses. Tax-free employer payments. So employers who provide this financial assistance to employees affected by the wildfire must ensure that their payments are properly classified as qualified disaster relief payments to maintain their tax-exempt status, as we've already mentioned. And so taxpayer action steps include reviewing insurance coverage, so deduct only insured losses. Professionals in tax are great to contact to help navigate complex deductions and filing requirements, and then staying informed about potential legislative changes is critical, as Congress may introduce additional relief measures that could expand tax benefits for affected individuals and businesses. So just to recap here, the tax relief measures discussed in this presentation provide a critical lifeline in a financial sense, of course, for those impacted by the January 2025 wildfires. By understanding available deductions, filing extensions, and disaster-related tax provisions, individuals and businesses can reduce their tax burdens and access financial support. For personalized assistance, consulting with a qualified tax advisor is highly recommended. Thank you for your time, and we encourage you to stay informed about additional relief measures as they become available. So if you had any questions about anything during the presentation, please email us at info@taxpayershelpcenter.com, and your questions will be answered by a tax professional. And again, since our services are free, donations are crucial for our support and expanding our reach. Monetary donations are greatly appreciated. Additionally, those who can volunteer their time, expertise, or help spread awareness are a great help. And with that being said, thank you all for listening and have a great day.